So the earlier in the last lecture, we discussed about human resource accounting and its concept and its development over a period of time in different stages. So today we will continue with the discussion with the valuation models, which has been developed over a period of time in human resource accounting. That we know that as far as human resource accounting is concerned, it is not just we don't have particular standards. Various authors and proponents of human resource accounting has done a lot of work on it, but still we have not any model which is a standardized model or which is adopted by all the organizations, and even all the organizations are not presenting this information to all of us. So they are presenting it in voluntary basis, some are presenting it in the notes to the accounts, some are presenting in the form of various kinds of reports or in their annual reports. Some are presenting them in the form of accumulated expenditure which has been incurred on human resources and on the asset side. So all these things are there, but apart from that, what the various authors has done, that we are going to discuss today in continuation of earlier model which we have already discussed. So today we'll be talking about earlier we have discussed the objectives, structure we have already discussed. We have already introduced the topic, then what is HRA, different authors have said something about HRA, we have already discussed. Similarly, we have discussed 5 stages, so that we will not be repeating today. We will be straightway coming to the valuation model, that is the measurements in the human resource accounting. So that will be the basic purpose of today's discussion, and we'll be continuing with that. So as far as measurements in human resource accounting is there, that is the biggest challenge in human resource accounting, that we have to assign a monetary value to different dimensions of human resource cost and whatever investments we have made and worth of the employees. So 3 components are there here. So whatever human resource costs are there, we have to assign monetary value to them. Whatever investments we have made in the our human resources, that we will find out, and what is the worth of the employees, because as far as asset is concerned, asset is recognized that thing which has which is going to accrue some economic benefits in the future. If we are going to get some economic benefits in the future by making some investment in the human resources, that is to be recognized as an asset. So as far as approaches are concerned, there are 2 kinds of approaches that is available to measure the human resources. One is cost approach and second is economic value approach. So as far as the cost approach is concerned, these involve methods based on the cost incurred by the company or organization with regard to the employee. For example, we incur various kinds of cost. First, for recruiting the employees in the organization, we incur certain costs. For example, advertisement is given, that cost is involved there. Then you receive the application, processing of the application. Then recruitment cost, we hire so many people to take interviews and complete the selection process. That cost is there. When employee join, we make certain kind of cost, for example, to train the employees as per the environment of the organization. These are the various kinds of costs which are incurred by the organization. So cost approach involve methods based on the cost incurred by the company with regard to the employee. This is one approach. Second approach, which we'll be discussing, that is regarding economic value approach, which include various methods based on the economic value of the human resources and their contribution to the company's gains. And this approach looks at the human resources as an asset and tries to identify the stream of benefits flowing from the asset in future. So we will here find out the present value of a stream of various benefits which are going to come in the economic value in the future, and we will find out the present value and accumulated present value so that we can find out the value of the human resource. So 2 approaches are there. Number 1 is cost approach. Second is the economic value approach. So both approaches has its own benefits or demerits. So we have to look into as per the particular requirement or environment of the organization, which method is suits to us and which method gives the accurate value of the human resources in the organization that we have to arrive at. So as far as the cost approach is concerned, first approach is cost approach. So as far as cost approach is concerned, basically when we have to define the cost, cost means the sacrifice incurred to obtain some anticipated benefit or service. When you make certain cost, incur certain cost in the organization to hire the employees, to train the employees, what is the purpose of training the employees? The purpose is that we are going to get some anticipated benefits of service in the future. So cost is the sacrifice, the amount which is paid by the organization to obtain some anticipated benefits or service in the future. Secondly, all these costs have two portions. First is the expense portion and second is the asset portion. For example, you are paying regular salary to the employees, monthly salaries or weekly salaries. So if these kind of things are paid, the benefit of which is realized immediately. So in the month in which the salary is paid, the benefit of work is enjoyed by the organization in the same month. So these are treated as the expense, and the any kind of cost which is incurred on the employees, the benefit of which is going to be given in the more than 1 year, 2 year, 3 year or 5 year, that is to be treated as the asset portion of the cost. So expense portion is that which provide benefit during the current accounting period, usually the current financial year. For example, salaries expenses are there, or some expenses you paid on the employees for their benefit, which are consumed and exhausted in that particular year. That is the expense portion. So as far as the expense portion is concerned, that is debited to the profit and loss account. So this don't become part of the value of the human resources as an asset. Next, whereas the asset portion is that which is expected to give rise to benefits in future, arriving at a clear distinction between the two. However, there is a problem. Sometimes it is very difficult. Even the Flamolds in 1999 recognized that there is some kind of difficulty sometimes that we are not in a position to find out which cost is the expense portion, which cost is the asset portion. So therefore, the clear distinction between two is required. So we have to find out on the basis of some experiences or on the basis of some studies which are conducted by the experts, that which is the expense portion and which is the asset portion. So that we can find out the value of the human resources. So as far as the expense portion is concerned, that is debited to profit and loss account, and as far as the asset portion is concerned, that is shown in the balance sheet. So the cost approach, there are two types of cost of special importance in the human resource accounting. These are original or historical cost that we incur, and second is the replacement cost. The historical cost of the human resources is a sacrifice that was made to acquire the human resources, for example, in the form of advertisement, in the form of selection process, and to develop the human resources, that is to train them for the working environment of the organization. So these include the cost of recruiting the employee, selecting the employee, hiring the employee, placement of the employee, orientation, and the on-the-job training. So while some of the costs like salaries, for instance, are direct cost, and other costs like time spent by the supervisor during the induction and training are the indirect cost. So the historical cost is basically has to be segregated in the two portions. That is, one is expense portion and another is our asset portion. So as far as expense portion is concerned, like salaries, these are to be debited to the profit and loss account. But if it is going to give benefit, for example, you pay salary to the trainers for induction and training. So these are the asset portion. So we have to clearly define what are the asset portion cost and what are the costs which are directly to be debited to profit and loss account, that is the expense portion. So this is very important. So historical cost is the amount spent or the sacrifice that was made to acquire and develop the resources. Second kind of cost which is included here is opportunity cost. That means the calculation of what would have been the return if the money spent on HR was spent on something else is also used. Suppose you are putting some money on training of the employee, development of the employees. If you spend this money somewhere else, you will get some returns. So that cost which would have been obtained if the money spent on HR is spent somewhere else. That is called opportunity cost. However, this method is seen to be not objective method. So because it depends upon the whims and calculations of the organization itself. So hence its use is restricted to internal reporting, not for external reporting. So we don't use opportunity cost. So usually when we say that cost approach is there, we usually use the historical cost approach for valuing the human resources. So as far as the cost approach is concerned, it may have the replacement cost of the human resources. Replacement cost here is the cost that would have to be incurred if present employees are to be replaced. For example, we have 10 employees and all 10 employees has to be retired and then new employees has to be recruited. That means that cost which would have been incurred if we replace all the employees, and the cost which needs to be incurred is called the replacement cost. So that may also be relevant for valuing the human resources as per the cost approach is concerned. For instance, if an employee were to be leave on today, several costs of recruiting, selection, hiring, placement, orientation, on the job training would have to be incurred in order to replace them. So whenever a person retire, that doesn't mean that it costs nothing. It costs because we have to replace that employee. We have to employ other person on that place. So various costs like recruitment, selection, hiring, placement, orientation, and on the job training has to be given to the new employees. So all these costs are replacement costs. So such cost has two dimensional. One is positional replacement cost, or the costs that have to be incurred to replace the services rendered by employee only to a particular position. For example, a general manager is replaced. So that means to get the work from the new general manager, you have to incur various kind of costs. So these are the positional replacement costs. One. Secondly, personal replacement costs, or the cost incurred to replace all the services expected to be rendered by the employees at various positions that he might have occupied during his work life in the organization. For example, when a person is working in the organization, sometimes he is giving his services as a multitasking person. He is working on various positions. So if you have to calculate the cost to replace all the services which are expected to be rendered by the employee, the new employee which is coming at various positions, that is called the personal replacement cost. So two kinds of replacement costs are there. One is positional replacement cost and second is the personal replacement cost. So as far as the cost approach is concerned to calculate the replacement cost of the person is concerned. So the cost approach is basically positional replacement cost, which is having three segments. One is acquisition cost, second is learning cost, third is separation cost. So first, acquisition, you have to acquire the person in the organization. You incur two kinds of costs. One is direct. Direct means it's recruitment, selection, hiring, and placement. So that is the direct cost. Sometimes you incur indirect cost. For example, cost of promotion on transfer from within. You transfer from one position to another person. So formal training and orientation or on the job. So you have one training center where all kinds of employees are there. So you cannot directly say that this training is particularly for this department, but your department is also getting the benefit out of it. So that is indirect cost. So apportionment on the basis of number of employees has to be made. So first we have the acquisition cost, which may be direct or indirect. Similarly, you have the learning cost. It may also be two types. Learning cost means while doing the job, there may be two kinds of cost. Direct cost in your organization, in particular department, you are doing some kind of training, that is a direct cost. So indirect cost of trainer's time separation. For example, you send the employee for 2 months to the training. So in place of that person, you have to incur certain costs that are indirect costs. So similarly, separation cost. Separation means you fire the employee from the organization, you retire the employee from the organization. So because of that, you have to incur certain, you have to pay certain separation pay, you have to incur certain loss of efficiency prior to during search, and cost of vacant position. If a position remains vacant in the organization, then you have to incur certain costs because your work efficiency is affected by that. So as far as the cost approach is concerned, you find the acquisition cost, learning cost, and separation cost, and make the appropriation and apportionment according to some designed methodology, then find out the total cost of human resources in your organizations. Second value is the economic value approach. Here, we don't take the historical cost as a basis to find out the value of the person or value of the human resources. Here, what we do, we try to calculate the future benefits in the form of economic terms from the persons or human resources which are appointed in the organization, and then try to find out the present value of such kind of value, and that is called economic value approach. So as far as the economic value of human resources is concerned, it is the present worth of the services that are likely to render in the future. So this may be value of individual, which may be value of groups, or the value of the total organization. So we find out the value of the individual first, then groups, and then the total organization under the economic value approach. So this method of calculating the economic value of individual may be classified into monetary and non-monetary methods. There are two kinds of methods which are available. So first we will be talking about monetary measures for assessing the individual value. A person who is working in your organization, how much it worths, because we have to calculate the future economic benefits which are going to arise from the services of that person in present, and find out the present value, and this will be the value of the individual. So Flamors, which was the proponent of valuing the human resources, and he was an expert. He conducted so many experiments. So on the basis of that, he developed certain models. So Flamor's model of determinants of individual value to the formal organizations are: first, according to the Flamor, the value of individual is the present worth of services that he is likely to render to the organization in future. So whatever in future he will be providing us the services, we will be finding out the present value of the worth of these services, and that will be the value of individual or human resource in the organization. So as an individual, he moves from one position to another. For example, a person who is inducted in the as a clerk, then he becomes assistant, then he becomes superintendent, then he becomes the joint secretary, then he becomes secretary. So he move from one position to the another at the same level or at a different level. So the profile of the services provided by him is likely to change in future. So when we calculate the individual value according to the Flamor's model, that is the present value of worth that is likely to render in the organization in future on various positions. So we will be, for example, if the person is going to be there for 10 years with us, but in 10 years, he will be working on various positions. For example, he may be working as a clerk during that period, that assistant during that period, then as superintendent during these periods. So we will be finding the value of the person at different levels. So that may likely to change. So we'll be finding out the present value of these persons. So the present cumulative value of all possible services that may be rendered by him during his or her association with the organization is the value of the individual. So Flamors was of the view that when you have to value the individual, so we have to determine what kind of services he is going to provide on different positions in future. And we will be finding out the economic value of these positions and services at present. So we'll be finding out the accumulated present value of the services of the individual, which he is going to provide in the future. So that will be the value of the. So there are various dimensions of the Flamors. So Flamors said that value of individual is uncertain and has two dimensions. First is the expected conditional value of the individual. That is the amount the services the organization could potentially realize from the services of individual during his productive service life in the organization. So expected conditional value means what amount of in years he is going to stay with the organization, what kind of services he is going to render to the organization, and what is going to be realized from realized from the services of that individual in the organization. Secondly, it is composed of three factors. Number one, first factor is productivity or performance. That is set of services that an individual is expected to provide in or his her position. Second is transferability. First is productivity. Secondly, the set of services he is expected to provide if and when he is different positions at the same level. So he will be working at different positions. So transferability factor will also be taken into account. Similarly, he may be promoted from one position to another position. So set of services that are expected when the individual is at higher level positions. So all these three factors will be taken into consideration to find out the expected conditional value of the organization, that is productivity. Second is transferability, and third is promotability. So similarly, the framework said that these three factors depend to a great extent on individual determinants like his activation level of the individual, that is his motivation and energy level, and organizational determinants like opportunity to use these skills or roles and the reward system. So these are various dimensions which are given by the framework. The second dimension is the individual is expected realizable value, which is the function of expected conditional value and the probability that individual will remain in the organization. For example, we say that every year he will be providing the services value to the 10,000 rupees. But what is the expected probability that he will remain with the organization? In the first year, it may be 90% probability. In second year, it may be 80% probability. In third year, it may be 30%. So we will multiply that probability with the value of the services which we are going to get in the every year. Find out the present value. So that the his individual expected realizable value can be found out. Since individuals are not owned by the organization and free to leave, ascertaining the probability of their turnover becomes very important. So it is very important for all of us to find out the probability that person will remain in the organization. This is one of the very important dimension of the Flamholtz. So Flamholtz model work on the chart which we have presented here. So Flamholtz model says that first it determines the conditional value, and second there he has prescribed the elements of the conditional value. So as far as individual is concerned, its conditional values are its skills and activation level. So the more skillful the person is and more he is active, he is going to stay with you. So now because of skills and activation level, he may be promoted. There may be a promotability factor, there may be a productivity factor, there may be a transferability factor. So if skill and activation provide satisfaction to the employee, then its individual conditional value will be probability of maintaining organizational members. He will be more remain with the organization, and it will realize the individual expected realizable value to the organization. So similarly, second is its a role and rewards. The more you give the role to the person to work within the organization and give rewards to the person, he will feel satisfied, and the probability of maintaining the organizational member will be very high. So individual conditional value, that is dependent upon its skill, activation level, role and rewards. So with multiplied with the probability of maintaining the membership, we will be getting the individual expected realizable value of to the formal organization to that person. So Flamod model say that when you have to find out the economic value of the person in the future, present value of the economic value which the person is going to provide to the organization in present, so that will depend upon the individual factors. Conditional value will be set on the individual factor, that is his skill and activation level. The more the skill is there, more the activation level is there, naturally the three factor positional factors, that is promotability, productivity and transferability factor will be there. If it is satisfying, then his position probability of maintaining the membership of that organization will be very high. We will multiply with the conditional value which we have calculated, and we will be getting the individual's expected realizable value of that person to the organization. So the interaction between the individual and organizational determinants mentioned above leads to job satisfaction. If person is skilled, activation level is good, and his role is defined in the organization, and he is given an opportunity to work on different roles, and he is also given rewards, his probability of maintaining organizational membership will be very high, and this will easily give us the individual expected realizable value to the formal organization. So the higher is the level of job satisfaction, the lower is the probability of employee turnover. Employee turnover means he leaves the organization frequently. So therefore, higher is the expected realizable value. So this model has been given by the Flamolds, in which we find out the individual determinants and the organizational determinants to leads to if it leads to job satisfaction, the person will be higher value. So in this way, we find out the by multiplying the individual conditional value with the probability of maintaining organizational membership, and then finally we will find out the individual expected realizable value to the organization. Second model, which is also a revision of the original model, Flamolds stochastic rewards valuation model. Because Flamolds experience that a person don't work on one position only, he work on different positions. So movement or progress of the people through organizational states or role is called stochastic process. So the stochastic reward model was developed by the Flamolds, which says that stochastic reward model is a direct way of measuring a person's expected conditional value and expected realizable value. So it is based on the assumption that individual generate value as he occupies and moves along organization rules and renders service to the organization. So it presupposes that person will move from one state in the organization to another during a specified period of time. So in this model, exit is also considered to be a state. That means he retire, he leave the organization. That is also considered in the Flamold stochastic reward valuation model. So Flamold's stochastic reward valuation model needs certain information. So if you have that information, you can easily find out the value of the human resources in the organization. Number one, it needs the set of mutually exclusive states that individual may occupy in the system during his or career. So if you want to find out the value of the human resources according to the stochastic reward valuation model, first thing which you need that what kind of position he is going to get. For example, and in a teaching profession in the colleges, in the beginning, we know that he is going to be recruited as an assistant professor. Then as assistant professor, he will work on 3 positions. That is in the grade pay of 6,000, then higher grade pay of 7,000, then grade pay of 8,000. So after enjoying the position of these years, then he will move to the position of associate professor. Then from associate professor to the professor. Then from professor to the deans or the head of the department. So there are a number of options. So Flamold's stochastic model require that we know the positions individual may occupy in the system during his career in the organization. Secondly, the value to the each state to the organization is to be known. So what value he provide, that is to be calculated. Thirdly, estimates of person expected tenure in the organization. When he will retire, how many years he is going to stay in the organization. The probability that in future the person will occupy each state for a specified period. For example, if he is an assistant professor, what is the probability that he will remain with you? If he promoted to the associate professor, then what is the position, that probability that he will remain with you? So that probability needs to be calculated. So the discount rate to be applied for future cash flow. So because this reward or economic value method depends upon the finding out the present value of the services which a person is going to provide in future. So that definitely we have to apply the discount rate to find out the present worth of these services. So that discount rate needs to be, we are evaluating at 9% or 8% or 7% or 6%. At what discount rate we are going to get the future cash flows. So second model is a Levin-Schwartz compensation model for human resources that is provided here. So Levin-Schwartz in 1971 has defined the value of human resource capital embodied in a person of certain age as present value of employees remaining future earning from employment. For example, if I am working I have joined as an assistant professor in the organization, definitely I am going to get different kind of salaries at various positions. And it is expected that you are going to provide these values to the organization. As an assistant professor in future, how much salary I am going to get? As an associate professor, I am going to get some salaries. What is the present worth of that? So according to Levin-Schwartz, he said that employees' remaining future earnings we have to calculate and then find out the present value of that by applying certain kind of discount rate. Then we will be in a position to find the human value of the human source. The proponent of this model have considered that labor force as a whole would be constantly associated with the firm. So this model has adopted and assumed that the person will stay with you. They are not going to leave you in future. So this concept has been stated, and all employees are classified in specific groups according to their age and skills. So employees will be classified in different categories as per their age. For example, when we classify them in the three categories, assistant professor, associate professor, and professor, definitely age and skill, on the basis of age and skill, they are going to be promoted. So all employees need to be classified in different groups according to their age and skill. So similarly, average annual earnings, their average annual earning has to be determined from the various ranges of age. At the age of 30, how much he is going to get; at the age of 40, what he is going to get, or at the age of. So the total earning of each group will get to retirement age are calculated. So whatever up to the retirement age, for example, as an assistant professor, if he is going to retire on the basis of age and skill, as an associate professor, if he is going to retire, so total earnings of the groups will be calculating and finding out the value. So the total earning calculated as above. For example, we have three groups: assistant professor, associate professor, and professor. We have find out their values. In future, in the form of earnings they are going to get from the organization, that is the value in different years, and then we will discount at the rate of cost of capital. So the value thus arrived will be the value of the human resources. So Levin Schwartz has given this model, which is visible on the screen to all of you. Value of the human resources, VR, relating to employee, which is R-year-old. Suppose karo, in the organization we have three groups: age up to 50, age up to 60, age up to 70. So value of human resources relating to employee, which is R-year-old, is a summation of T varies from R to T. ET here is the annual earning up to the age of retirement we will be calculating, and R is the discount rate here, and T, which is a minus R, the duration of the services in the institution, that we will be calculated. So by using this formula, we can arrive at the value of the human resources as per the Levin-Schwartz compensation model is concerned. So, but there are certain disadvantages of Levin-Schwartz compensation model. So this model implies that future work condition of the employee will not change over a span of time, but will remain the same. This is not going to be true, because the work conditions are going to change. So this approach does not take into account the possibility that employee will withdraw. So here probability we have not considered, but Flammold's model, which we considered earlier, they have taken it. So it is therefore not realistic, that it is not possible that you assume that the person is going to stay in future forever. So it ignores the variable of the career movement of the employee within the organization. So that is also a bad effect of this model. So it does not take into account the role of change in the employee. A personal manager may become chief legal officer. So however, this method does not give the correct value of the human assets, as it does not measure the contribution to achieving organizational values, because it takes into account the future earnings of the organization, future earnings of the groups from the organization, and on the basis of that we find out the value of the human resources. So therefore, this method as per present condition is not much realistic, or do not fulfill all these conditions. So these are the various models which we follow for valuing the human resources. There are two approaches for this. One is cost approach, and second is the economic value approach. So there will be a theoretical question on it. No practical question will come to you on human resource accounting. So all of you must listen these two lectures again and again. So I will be putting these lectures on the channel also. So unless and until you read and listen, you will not get the benefit out of it. So today's it is enough today. So now you can on your video so that we can have some questions. One or two. 2 minutes. Yes. All you must on your videos. Anything you want to ask. Anything you want to ask. No question?
इसमें मॉडल्स जो हैं वो दो ही मॉडल है, एक फ्लैम फोल्ड्स है और एक दूसरा
Ah,
11 एक्चुअली।
you must restrict on all these two only. There are certain other models also in books you can read because basically all other models are based on the theories of Flamholtz and Lev and Schwarzman. Okay.
ओके सर।
Any other question? Okay, you all of you may leave now. MCOM BI first semester students, so that other students are joining, so their class will be there.
ओके सर, थैंक यू सर।